Well,
the Banking Association of South Africa is warning that the debt relief bill will hurt the poor.
It says the National Credit Amendment Bill is not sustainable. It also lessens banks' ability to extend credit to low-income learners.
Well, if the bill is passed, it could result in the write-off of up to 20 billion rand in debt.
Well, in just a moment, we'll be joined by the Banking Association's MD, that's Cas Coovadia, to talk about this a little bit more. That's coming up.
Unfair dismissal, car accident, court appearance.
Let Clientele Legal tackle your legal problems. Whether it is a car accident, unfair dismissal, uncontested divorce, unfair blacklisting, or a wrongful arrest, we have tough professional lawyers standing by to assist you.
With the help of Clientele Legal, I kept my job and I can support my family.
I definitely got value for money. It didn't cost me a cent, just my monthly premium.
There was one man with his lawyer against a big bank and I won.
Car accident, faulty goods or bad service.
You fired!
Unfair dismissal.
No matter how big or small your legal problems, don't tackle them by yourself. Clientele Legal will do the tough work for you. SMS RIGHT to 42770 and we'll call you back.
Welcome back. Well, we are joined on the couch now by Cas Coovadia from the Banking Association. We're speaking about this debt relief bill that you said is going to hurt the poor. And that process is underway. It's before the Portfolio Committee on Trade and Industry. Why does the Banking Association believe this is not a good bill for the poor? Yes?
Well, there are a number of initiatives already underway in the industry. And when I'm talking about the industry, I'm talking about the broader credit industry, not just the banks, okay? Because a lot of people have retail loans, they have motor loans, they have microfinance, all sorts of that. And there are a number of initiatives underway to actually address the issue of over-indebtedness and assist people who are over-indebted. So if you look at our statement, that banks have, beyond what is required by the existing National Credit Act, they've reviewed 3.4 billion rand worth of debt in 2016, 4 billion rand worth of debt in 2017, and we believe that is working, and we believe that should be actually strengthened to make it work. Having said that, if government wants to introduce a bill and they want to legislate to a certain extent, we've interacted quite well with the committee on this, and we've given in a lot of input. But we believe that the bill that as it currently stands is absolutely intrusive and would actually increase risk in the market. So for instance, if you look at that the Consumer Tribunal and the courts are to be granted powers to make debt restructuring orders. We can reduce interest rates to zero, including could reduce interest rates on mortgages to zero under certain circumstances. We believe that's extremely intrusive. It increases the risk, and when risk increases, banks price for the risk, loans become more expensive or they actually dry up. And we don't believe that's good for the country.
And it could also affect access to
Absolutely.
credit, because then banks will not be so keen to lend money at 0%.
Absolutely. And the other thing that we keep on forgetting is that banks, there's the National Credit Act, which stops banks from doing irresponsible lending, correctly so. Banks are custodians of people's deposits, so they have to do the lending in a way that earns some income and gets some money back. So we believe that over-indebtedness is absolutely a problem. But it's not just, you don't deal with that problem by sending out the message that if you get over-indebted, your debt could be expunged, your interest rates could be reduced, because that then creates an environment where not only is the irresponsible borrowing, but there's also irresponsible lending, particularly if formal debt dries up and then people go into the underground market.
So what for you are the main factors, Cas, that are causing uncertainty around this bill? What should have been done and what hasn't been done?
Well, the powers given to the National Consumer Tribunal, for instance, the scope of the application. So anyone earning under 7,500 rand with debts up to 50,000 Rand. The bill says that the debt can be extinguished after a period of 24 months, and in those 24 months, interest rates are reduced and so on. And then the power is given to the minister to review and increase the income and unsecured debt thresholds, okay, from the current 7,500 Rand to 50 and 50,000 Rand above that. Now, all of those just create uncertainty in the industry. And what we would want to do is actually work with the committee. And this is a committee bill, so it's the DTI portfolio committee that has introduced this bill, not the department. We would like to work with the committee to see how does a legislative environment facilitate what is already happening and actually back that up and strengthen that, and do that in a way that actually encourages formal lenders to do lending responsibly.
Now, I mean, this bill has been positioned that it's going to be providing some debt relief to the poor, but from what you are saying, you don't think it's going to be so. It's going to be the case. How then do you provide relief in the view of the association? How could we provide on a sustainable basis?
So let me give you an example. We've been working for many years on something called DCRS, which is a voluntary debt review mechanism. I chair a committee that's made up of associations representing all credit providers, micro lenders, furniture traders, retailers, motor vehicles, banks, and others. Right? All of those had agreed to a set of rules. So we say if you are over indebted and can't manage your debt, the first rule is we reduce interest rates on unsecured credit to zero. See how many people restructure, and then there's a set of other rules. We had agreed that across the industry, and what we are saying is that if debt counsellors apply those rules, so what it means is that if a borrower has, let's say, 10 credit agreements ranging from retail stores to microcredit to banks to motor vehicle, all of those borrowers, all of those lenders, will agree to those sets of rules. Debt counsellors apply those rules. We restructure over a period of 5 years. And then as those people meet those restructured debts, then they come back into the credit system. So
and that's in place currently?
That's in place currently. We've been talking to the National Credit Regulator to make that a condition of registration at the National Credit Regulator. We're interacting with them. We believe that if the credit regulator recognizes that unequivocally, it will actually drive up volumes in that. And then there are individual banks restructure their clients all the time. It's not in the interest of banks, either from a point of view of business or politically, to go to court and to sequestrate and all of those things. So those are the last thing that they will do. So I think there's a whole lot of stuff happening in the industry. Okay. And I